and welcome to the Money Show. It's a Women's Wednesday, the day we put spotlight on the women who are not just earning money but making their money work harder. From investing and wealth creation to retirement planning, entrepreneurship, financial independence, Indian women are taking charge of their financial future like never before. In fact, women now account for a growing share of country's investor, reflecting a powerful shift in financial participation and confidence. Today, we will answer your most pressing money questions. We'll be decoding smart investment strategies and help you build a stronger financial foundation. Whether you are just starting out or looking to take your wealth journey to the next level. And we are also opened our number also. You can write to us on our email ID also. You can send your query on our WhatsApp number flashing on your screen, which is 865 797 4571. You can write to us on the Money Show at etnow.tv. We'll take your queries from our guests. And today we are joined by a very special guest, Sameer Shah, founder of Investor FinServe. Thank you so much, Sameer sir, for joining the Money Show. Thank you for your time.
For inviting me for your show, and it is always a pleasure to be part of your show.
Sir, so just to begin with, sir, today we are focusing on investors who are yet to start their journey, or those who have started journey, or I would say that Gen Z investor. It's a Women Wednesday also, and we will take queries of Gen Z investors also, because now, sir, Gen Z is the flavor, talk of the town. Everyone is talking about Gen Z. So, sir, I want to understand from you, when it comes to investing, what kind of trends you have observed from the Gen Z investors?
So basically, if we talk about our findings, what we see is this day the youth is focused about not only and initially they spend money, but after some point of time they also understand the importance of saving for the future. Say initially they have started with, like, no, they want a quick money, they have burned their hand in the derivatives trading, and now they become more educated, they are taking more informed decision. And you can see the growing trend of young investor in mutual fund. And the best part is that they don't take any emotional decision just because of some short-term market movement. So now I must say that this age group has become much more matured investor, and they are taking a right decision for their future. And I must say that the awareness which they carry, which is really admirable.
Okay, awareness they carry is really admirable. But sir, you just said that Gen Z investors were tilted toward the FNO investing also, a quick money from futures and options. And the data by SEBI also says that more than 90%, and the latest data which was released last year shown that around 93% of investors are burning their money or losing their money, and average is also more than 50,000 rupees. So that has shifted or shifting, and where wealth management, advisory, personal finance, a show like the Money Show can help new generation, Gen Zs, to start their investment journey in a better way.
I completely agree with that. Just because when we say if we talk about the portfolio analysis, which we were doing about 5 years back, right, and the portfolio which today's generation is building, we can see a huge difference. Say earlier, what we used to see is, like, no, they simply select a fund which are topping in the chart, and we have seen generally investor having more than 16 funds in that portfolio. Nowadays, what we have seen, they are restricting themselves. They are trying to reduce the overlapping in that portfolio. They are trying to build a portfolio which has all the flavor And I believe the source of information, see, we are living in the information world. A lot of information available and freely available, right? So now I believe, and we have experience also, people have understood which source is very reliable, whom to follow, and how to build that portfolio. And trust me, show like yours has helped them to take a informed and right decision. Say there are like on
uh,
social media, a lot of
investor to take an informed decision, and the experts like you also, because a lot of people watch our show because experts opinion, and you are our regular guest also, so a lot of queries we get which categorically mentions that get our portfolio reviewed from Sameer Shah. Sir, for the Gen Z woman who is starting her investment journey, what should be the first three steps to build a strong financial foundation, and how can young women balance short-term personal goal while continuing to save and invest for their long-term future? So what would be your advice, first 2 3 steps to Gen Z women who are just starting their investment journey?
So first, let's talk about the how to build a financial foundation, strong financial foundation. So first step is like whenever we get a chance to interact with young investor, we always say that don't worry if your income is not very high during your when you are in early 20s, right? The biggest advantage is not money, but the time. So if they start early, trust me, building a wealth become very easy. So our advice generally comes like first they have to build an emergency fund. So keep at least 3 to 6 months of monthly expense in liquid or bank saving account, so that in case of any emergency you do not need to break your investments. Second is to protect themselves. We have seen many young investors, right? They largely depend on the health insurance provided by their employer. So that's not the enough. We always recommend them to buy their own health insurance. And if your family depends on your income, it is also advisable to have pure term insurance. The third and final step is like the biggest mistake what we have seen is people save money whatever is left. Ideally they should in the beginning of the month at least 20% of their income they should invest through SIP. This simple habit can completely change their future. Now, the second part, what we discuss about the how they can achieve short term as well as a long term goal. The simple rule, if they follow a easiest and simple rule, that is budgeting, right? That can help them to achieve both the goals. First thing, what they have to do is they have to list down their short term as well as long term goal. Second thing, what they have to do is how much money they'll need and when they will need. If they are aware about this, once they know all this thing, then they can decide how much investment is required for each goals, right? Once that is set, right, the best advantage here is with them Gen Z is like a long-term goal does not require a huge amount of monthly investment, right? Once even modest SIP amount, say like 5,000 rupees SIP for 30 years can
Okay.
help them
So,
to accumulate
sir,
close
at
to one
what
and a
age
half year.
you started your investing journey, sir? I'm sure, sir, you will be part of the millennial group or Gen X. In which category I can put you?
You can put me in Zen Y.
Gen Y category. And sir, at what age you started your journey, and do you regret that you could have started your journey little earlier also?
So Anuragji, I must say that I belong to a Gujarati family, and since my childhood, we have seen that the all people living around, they always talk about stock market investing. So from my college days, I have started investing in equity market. Yeah, obviously, that point in time, we were not having multiple investment option, and the information was also very limited.
No, so
So
I'm
initially,
asking about the SIP
SIP,
investment. At
I
what
have
age you
started,
started?
yeah, I have started since 2003, 2004. So
Okay, so then
last
also, so
20
you were
years.
pretty early,
Yeah.
sir. Okay, sir. Now moving on, going to our query section. So first query is from Ananya. She just turned 23 and want to begin investment journey, planning a trip to Sri Lanka by the end of the year, need around 60,000 for the trip, can save and invest 8 to 10,000 per month, seeks the best investment strategy to achieve her travel goal. Sir, Ananya, having her goal just by the end of this year only, she can invest 8 to 10,000. So what would be your strategy, or will you ask her just to have a time horizon little longer, 3 to 5 years?
I believe, Ananya, you have enough time to save for this goal. At least you and enough money also. Since your investment horizon is less than 1 year, our suggestion is not to go with direct equity or equity mutual fund, because it carries a market volatility risk. So our suggestion is that you can start investing either in recurring deposit of bank, or arbitrage, or ultra short term duration mutual fund that can help you to at least achieve your short term trip goal.
So that is a response for Anya for her short-term trip goal, investment tenure with your trip date. So that's a response for Anya. Moving on, another query is from Tara Sharma. She's a college student and new to investing, planning a Europe trip in 2028, want to start investing for her travel goal, seeks the right strategy for 2 years horizon. So all these Gen Zs are planning for a trip to Sri Lanka, Europe, means they don't have long-term goal. Sir, so what would be your response for Tara Sharma?
Say, Anuragji, many people think that they have to choose between like now enjoying life today and saving for tomorrow. I believe Gen Z in initial day, they believe enjoying their life, and that nothing wrong in that. The best part is they have started planning about they have at least clarity what goal they wanted to achieve and in what time. So if we talk about Tara's case, she has around 2 years timeline, right? Which is generally it falls under a short to mid-term category of investment. So here, investing in pure equity again carries a market volatility risk. Only 2 years is left. So our suggestion is that whatever investment you wanted to make 70% into low risk debt fund, right? And 30% she can invest into conservative hybrid fund. This strategy can help us to conservative hybrid fund can help take moderate amount of exposure in equity, which has potential to generate small return upside.
So, response to Tara Sharma can have 70% of their exposure to debt fund. Now, a live caller joining us, Samta. Samta, ask your question and tell us you are calling from which place. Samta, can you hear us? Okay, Samta has called us, but she has written her message also, query also. Investing from last 5 years with a 10 to 15-year horizons. Okay, Samta, Samta has joined us. Samta, please ask your question and tell us you are calling from which place.
I'm calling from Greater Noida.
Okay, Greater Noida. Ask your question.
जी मैंने लमसम कुछ इन्वेस्ट किया है फ्रॉम 5 ईयर, और कुछ फंड मेरे 5 ईयर कंप्लीट हो चुके हैं, और अभी मैंने कुछ फंड से रिडीम भी किया है। मेरे पास 2.5 लाख रुपए इस समय मेरे बैंक अकाउंट में। मैं किस फंड में इन्वेस्ट करूँ? आप मेरे पोर्टफोलियो को देख के बताइए कि मेरा लॉन्ग टर्म में है 60, अभी मैं 36 की हूँ, 60 प्लस में मैं इसको रिडीम करना चाहूँगी रिटायरमेंट प्लान के लिए। कौन सा पोर्टफोलियो, मेरा पोर्टफोलियो आप एनालिसिस करके कि सही है या इसमें किसमें रखना चाहिए, किसमें स्विच कर देना चाहिए?
Okay. So got your question, Samta. You are 36 now and want a planning till 60 years. Sir, Samta's portfolio flashing on the screen. ICICI Proof, Flexi Cap, 2 lakh rupees, Nippon Multi Cap, 2 lakh rupees, Nippon Mid Cap Growth, 2 lakh rupees, Nippon Multi-Asset 2 lakh rupees, ICICI Pru Business Cycle 2 lakh rupees, then Axis Small Cap 2.5 lakh rupees, Parag Parikh Flexi Cap 2.5 lakh rupees, HDFC Manufacturing Fund 2 lakh rupees and HDFC Pharma Fund 2 lakh rupees, sir. So, sir, 15-year plus horizon holds 9 plus mutual funds, sir. So, what will be your advice for Samta? She is holding 2.5 lakh rupees also and want to invest. So, sir, just reviews Samta's portfolio and what would be your advice to her?
So, Shamtadi, we have analyzed your portfolio. There is one thing which we would like to highlight, that is you hold a lot of thematic and sectorial fund in your portfolio, right? When we talk about thematic and sectorial fund, they carry a high risk, and top of that, before investing, we always suggest investor to have a proper understanding about this particular sector where he or she is investing. And top of that, if you are able to closely monitor the events which are happening in and around this sector, then only continue with this sectorial or thematic fund. And the another thing, when you are a long-term investor, holding sectorial and thematic funds is not generally advisable, because sectorial and thematic fund generally being used for encasing the opportunity which is happening in the particular sector. So our suggestion is that if you are long-term investor, you can stop this thematic and sectorial fund and divert this fund to flexicap fund. The another question which you have is, you have another 2.5 lakh rupees which you wanted to invest. So I would our suggestion is that please do not add any new fund, because you already hold 9 fund, and adding one additional fund will take this count to 10. So generally we suggest like invest our idle investment portfolio size is around 6 to 7 scheme. So suggestion is that please do not add any additional fund. This 2.5 lakh rupees, instead of investing in through a lump sum investment route, our suggestion is that take a STP route, invest your 2.5 lakh rupees into a liquid fund, and over a period of time, split this amount between 6 to 12 month equated equated amount, and invest into Parag Parikh Flexi Cap and either Nippon India Mid Cap Fund or Axis Small Cap Fund.
So that's advice for Samta. Through STP route, she can invest that 2.5 lakh rupees, and not advisable for thematic fund also. Instead, she can choose fund like flexi cap fund or multi cap fund. On this note, it's a time for a short break. Don't go anywhere. We'll take more queries, more questions on the other side. Stay tuned to ET Now. Welcome back after the break. You are watching The Money Show, your daily guide to the world of personal finance. So moving on, our next query is from Supriya. She is of age 20 years and wants to know if bank FDs can beat inflation. Seeks to understand the impact of tax and inflation on FD returns. Want to know if FDs are enough for long-term wealth creation. Sir, Gen Z, you were saying that they know they are investing in equities also, but they know the importance of fixed deposit also. So, Supriya want to know if bank FDs can beat inflation and how bank FDs can beat inflation. So, what would be your response to Supriya?
So my Supriya ji, my standard answer is like no. Bank FD cannot beat the inflation, but that does not mean that you should not invest in bank fixed deposit. Say when we talk about the holistic portfolio, it should have debt as well as equity allocation. So looking at your age, our suggestion is that only 20% of your total investable surplus should be parked into debt. So 20% of your investment should go towards debt. Rest 80% you can take exposure into equity. Both investment put together can help you to beat the inflation. That is the first part. Now, say why FD cannot help you to beat the inflation. Say on an average, if we talk about investment interest rate on your fixed deposit, generally it comes generally bank offer between 6.5% to 7%. And if we talk about the average retail inflation, that is who are around 5.5 to 6%. So effectively, the real rate difference between the inflation and FD is 1%. And if we consider the taxation part on your income, the post tax, the return, your total return become little negative. So it will not help you to beat the inflation part. So our suggestion is that you should have both. You can invest in both the world of investment, and by investing or diversifying into both the category, it will help you to beat the inflation.
FDs cannot beat inflation. Diversification to invest in fixed and equity is suggested by Sameer sir. Thank you so much, sir, for taking your time out and joining the Money Show and taking all the queries and sharing your experts' views for our viewers. On this note, it's a wrap on this edition of Money Show, your daily guide to the world of personal finance. But don't go anywhere. More on the other side after this short break. Stay tuned to ET Now.